Hello and welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of companies that they invest in. KYC, Know Your Company, is a show designed to give you regular investors a powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today we have with us on our radar, well, JSW Energy. Now, we do know about this company. It's been around for the longest times. It's also, in fact, changed gears considerably over the past 5 years and veered from thermal generation to renewables. Well, we do know that it has assets located across the board. If you consider, well, many states like Karnataka and Maharashtra as well. But, moving on in terms of the presence that it does have in thermal as well as renewable capacity, do remember that over the past 5 years, with the sharp pivot towards renewables, we now have renewable sector, in fact, contributing to, well, a significant amount, and now majority of the capacity is also from renewables. Thermal, of course, stands where it is. But even in terms of the planned added capacity, as you can see, the majority of the addition, or rather that which is under construction, is from solar, wind, and hydro and hybrid. Not so much for thermal, as you can see, which clearly gives you an idea about the plans that the company has on its anvil. Now, what we usually tend to do is that we take the performance of the company and we rate it on several parameters. So right at the top, what we do keep an eye on, as first is we talk about the income statement, the balance sheet. We also take a look at the return ratios and along with cash flows. And among the handful of other parameters which are also in focus, we have shareholding, street cred, as well as the dividend payout along with street coverage. And that should give you an idea about how the company is done, how the street looks at it, and we will rate the company based on all these parameters. So right at the top, let's start off by taking a look at the income statement. Now, as far as your revenue, your top line and your profitability is concerned, the company has done very well. So if you consider the last 3 years, it's seen a 18% CAGR for your revenue. We have an EBITDA growing at 23% CAGR. One might ask, why is it that the EBITDA has improved? That is solely because of their pivot towards, well, renewables, which is more cost efficient in general. And in fact, the company has seen an expansion of 370 basis points expansion in their EBITDA margins as well over the course of the last 3 years. So this certainly is going to be a thumbs up from my end, rather NDTV Profit's end. But let's also take a look at the balance sheet. Now, if you just consider the first half of this financial year, what we have seen is a little bit of a reduction in debt. And while the company continues to put in a lot more in capital expenditure, the company has also, well, done what it can to keep debt levels at reasonable levels. And because of that, well, its gross debt, which stands at around 30,000 crores, if you consider cash in bank, your net debt will be sub that number. And if you consider the net worth of the company, that would in fact take your overall debt to equity to the mark of below 1. And that's always a positive as far as a capital intensive company like JSW Energy is concerned. So that's a thumbs up as well. What about return ratios? Now let's pull up and talk about how things are faring as far as your return on equity and return on capital is concerned. What we have seen is that over the course of the last 4 years, we have seen an improvement in these ratios. And fair enough, you have your return on equity, that is ROE, moving from 6.1% all the way to 8.7% in FY24. Similarly, your return on capital has also, well, largely been, range bound. But the reason why I'm still giving it a neutral and not a complete thumbs up is because an ideal return on equity ratio would be, well, about 15 to 20%. It's the same for a return capital as well. Sure, we must realize that, this is a capital intensive business, which is why your return ratios can be lower. But, well, as far as the street's concerned, this number, at least as far as JSW Energy specifically goes, the number could have been a better one, which is why I'm giving it a neutral, only because of the fact that we are in fact seeing improvement in return ratios. Moving on to cash flows, the company has actually done very well in terms of operating cash flows, especially given the fact that they are continuing to invest in a lot of the newer capacities. And if you consider what's happened in the last 4 years, cash flows have improved. Then this is cash flows from operations, which actually for FY24 stands at around a plus of 4,100 odd crores. So that's a thumbs up too. Then from there on, we talk about shareholding pattern. Now, we will realize that very clearly the company does have a scarcity premium. And the reason for that is the fact that nearly 70% of the company is held by promoters, but the balance maybe, about 24% is held by institutions. So DI is holding about 10%, but another 15% held by FIIs, which of course is that leaves not much with the public. So that means it's just about 6% left with public. And hence, because of this, it's a very, very tightly owned company, or as you can see on your screen there, which is why this is also a thumbs up. Now, perhaps let's talk about the most important thing, something that a lot of investors keep an eye on, and in terms of how the company has done over the course of the last many years. So firstly, in terms of the way its share price has moved, it's given you a return of 8.8 times over the last 5 years. So that's a tremendous jump, a tremendous, capital appreciation, wealth creation as far as investors are concerned. And even in terms of 1 year, we've seen a substantial jump in your share performance. What about its dividends? Has it been reasonable? Well, we've seen the dividend come out to a certain extent on a year-on-year basis, but we must remember that because the company is in a growth phase, we won't really be expecting too much dividend dole out anyways, which is why I'm not giving it a thumbs up or a thumbs down. I will stay neutral on this one, and hence just half a point instead of a 1 full one. And finally, coming down to street coverage. Now, this is where we have, again, in general, positive coverage. So if you consider the analyst ratings on, JSW Energy, we have about 6 buys, 4 holds, and 2 sells. And along with that, on a 12-month consensus return potential of around, 11%, which is also not terrible, and which is why I would give this one a thumbs up as well. So on all the 8 parameters that we have spoken about right now, how does the company fare well? So it's certainly a thumbs up for the income and balance sheet, return ratios, neutral, cash flows also positive. And in terms of the next set of parameters, we only have a neutral on dividend payment. Otherwise, shareholding, street cred, and street coverage are looking reasonably good. And if I give just half point for the 2 neutrals, that gives us a total score of 7 out of 8. So certainly not bad for a company of this stature. And with that, let's move on and talk about very quickly the SWOT analysis of the company as well. So if you consider the strengths, we do know that it has strong operations coming in. There's a strong pipeline as well with respect to, the agreements that it signs with various governments, and a robust balance sheet. In terms of weakness, what we are seeing is, debt levels which have been increasing to a certain extent. But if you, this is perhaps a temporary phenomenon, as the management will point out in the conversation which just follows. Of course, return on assets has been slightly weak, but that's something that we've been talking about as well. In terms of opportunities, it has a strong capacity visibility of 14 gigawatts by FY27, and that certainly is going to be a big one for the company, which should continue to drive growth for the top line. In wind turbine manufacturing is again a big one. Let's not forget that the company is also entered into this energy storage segment. So that is another up-and-coming sector where the company is looking to take advantage of. Moving on to threats. Well, we have slow or delayed commissioning of some key projects, or that's not really come through so far, but that could potentially be a threat, and weaker than expected operational performance of assets, or as something which could also weigh down on, the operations of the company. So all in all, it's the company has done fairly well, and that's evident in the kind of price action that you've seen for the company as well. What can we do with the company? Well, we are going to try and get you an analyst, and if we do have, Manish Chaudhary, he's the head of research at Stocksbox, who joins us on the show. Manish, good afternoon. Thank you so much for joining in. Let's
Yeah,
start off
thank you,
with
Pawan.
your view on JSW Energy. How does it stand one by itself, and how do you rate it in comparison to some of its peers in the sector?
I think the first and foremost point, I think JSW Energy has a very strong parentage. So that comes to the mind, I think, first. Secondly, the pivot of JSW Energy and other companies in the power sector towards the renewable thing, I think it has a lot to do more with the cost economics of the solar and wind. I think at this point in time, the renewable cost economics is around 2.5 to 3 rupees per unit vis-a-vis thermal, which comes around of 4 rupees per unit. I think that is the main pivot where every company is trying to move towards the renewable space. And also, the time of commissioning of a renewable project is much faster as compared to a thermal plant. So, as we see currently, with the capacity of JSW Energy standing at around 7.7 gigawatts odd, and they're trying to move it to 10 gigawatts by FY25, most of it coming from the renewable space. So I think they are better placed in terms of the quicker commissioning which would happen with the projects. Yes, there is some delay in few thermal uh, power plants, but I think those issues could be sorted out. One more point which comes to mind is the streets was seemingly worried about the EBITDA performance in the second quarter. But my sense is that in the second quarter, mostly the power demand overall was very flattish. I think it stood around 435 billion units on a India level due to the heavy rainfall all around. So JSW Energy, the part of the power which is not under PPA and gets sold through the merchant tariff, there the revenues were impacted. So my sense is in the next 2 quarters, the demand would pick up and the impact which we saw in the second quarter due to the merchant tariffs would go by, and we would see strong financial performance also on the EBITDA level. The generation has been strong and it grew by around 14% YOY, both on the thermal as well as the renewable space. And I think with the commissioning of more projects, they should pick up. So overall, the outlook for the revenues and EBITDA with the kind of commissioning which is likely to come in the next 2 quarters, I think it's on track.
All right. Manish, let's talk about the sector, Jen. Then, how does JSW Energy stand with respect to perhaps a larger peer like NTPC, and perhaps also comparable to a certain extent to Tata Power too? In the preference matrix, how do these companies stack up for you?
I think the overhang with NTPC vis-a-vis JSW Energy, I would mostly give it to the execution. I think the street looks more confident about the execution capability of JSW Energy vis-a-vis NTPC, which comes with a baggage of the PSU tag. So, in the order of preference, if I want to talk, I would rate JSW Energy as the first, second Tata Power, and third NTPC. Yeah.
Okay. Manish, very quickly, are you concerned about the valuations of JSW Energy?
I think, yes, if you look at the price to earning multiple of JSW's energy at this point in time, it's hovering around somewhere around 50 times. So I think, yes, that's expensive. But I think I would give more preference to the kind of commissioning which is likely to happen and the kind of earnings growth which would come in the near future. So I think I would still be a buy on this counter despite some valuation discomfort at this point in time.
All right, point taken, Manish. Thank you so much for joining us and giving us your insight into this particular company. But now, as is the custom, let's shift focus and hear from the management itself. I earlier spoke to Sharad Mahendra, who is the joint MD and CEO of JSW Energy, who laid out the company's capacity utilization plans and the road ahead. Listen in.
If we talk of our current capacity as we are talking, the total operational capacity is close to 7.7 gigawatt, and out of which only about 47% is the thermal.
Right.
It is more than 50%, half of the capacity is in the renewable energy space, including the hydro as well as the solar and wind capacity.
Right.
And maybe as we have already informed earlier also, by the end of the current fiscal, by March 25, we will be reaching a capacity of 10 gigawatt with
Right.
more than 60% of the capacity in the renewable space, and slightly under 40% will be the thermal.
Right.
So our focus in last few years has been to increase our share in the renewable energy space.
Right.
And we have been moving in that direction. And beyond 10 gigawatt, as you asked for, we have an order pipeline of in excess of 9 gigawatt, and which is 100% renewable.
Right.
So we are on track of 9.2 gigawatt capacity addition beyond 10 gigawatt, and out of that 9.2, slightly under the 6 gigawatt, we have already signed the power purchase agreements with the utilities, and which are to be executed in 18 to 24 months timeline as per the PPA terms.
Right.
So that is the timelines we see for next 2 years, from 10 gigawatt beyond March 25 to add another 5 to 6 gigawatt of capacity, taking us in maybe close to 16 gigawatt of total capacity in maybe 24 years from March 25.
Sure. Mr. Mahindra, you spoke about the addition in the renewable space as well, but will most of it be towards solar, or and how much of an extent will wind and perhaps some of the others will contribute?
See, change in the trend, if we see the bidding space in the current year in first half or first 8 months, 9 months of the current fiscal, what we have seen is till last year we have been seeing majority of the bids coming in the plain vanilla solar or plain vanilla wind.
Right.
But this year there has been a significant shift that the utilities, the DISCOMs, the various states, they are looking for not just a power supply, but a solution-based supply.
Right.
Which is a mix. They came with first hybrid, which is a wind plus solar hybrids. Then it transformed to RTC renewable,
right,
which is a certain maybe meeting 60%, 70% of the requirement on round-the-clock basis, which was coupled with wind plus solar plus battery energy storage.
Right.
And now seeing that the solar power addition which is happening, there is a availability, sufficient availability which is happening during the daytime, but evening peak shortage is increasing.
Right.
So during the peak hours. So this year we are seeing solar plus battery energy storage with discharge during the off-solar hours during the evening peak to take care of that demand deficit.
Sure.
So these are the various customized solutions, and also the FDRE, which is the firm dispatchable renewable energy on an hourly basis, based on the patterns of different states and utilities.
Right.
What is their usage pattern, depending on, like if we see states like Maharashtra or Tamil Nadu,
right,
if we compare it with states like maybe Bihar or Jharkhand, here industrialization and the manufacturing portion in the overall economy is significantly higher in Maharashtra and Tamil Nadu.
Right.
So their usage pattern, as compared to states like Bihar, Jharkhand, where the manufacturing portion in the economy is significantly lower, is very different on an hourly basis.
Absolutely, yes.
So there is a solution base. Each utility will have a different requirement on an hourly basis. So those kind of FDRE bids also have been coming.
Right.
So that is where we have been focusing more.
Right. Mr. Mahindra, that actually leads me to the next question around, firstly, demand. What do you envisage from the nation and all the geographies that you are present in? And secondly, we have a lot of newer investors tuning into the show. So I also perhaps wanted a better idea of how the pricing mechanism works in the kind of contracts that you sign here.
Yeah. See, first when we talk of demand, like last 3 years, if we see the demand has been growing at year on year, maybe 7.5 to 9% growth. This year we have seen slight moderation in terms of the demand growth. Like November figures have just come, which is 5.14% demand growth year on year in November.
Right.
But we see that we have to realize that first half of the year, in the current year, H1 has been exceptional in terms of the elections and other things, which definitely in terms of the investments, always see the capex also, the government spends also have been slightly lower in H1 as compared to last year.
Absolutely, yes.
So, but we are confident that the basic fundamentals remain strong for the country.
Right.
And this growth rate, the economic growth will be there.
Right.
And power plays a very significant role.
Right.
So, but yes, assuming that a conservative estimate of 6% demand growth only, I'm not talking of 7.5 or 9.5, what we have witnessed.
Right.
Which means in terms of energy requirement, what is the increased requirement year on year? If we say next 5 years, it will be a 6% year on year growth.
Sure.
Which is conservative in my estimate.
Right.
Which means the country needs close to about 25 gigawatt of fresh capacity every year.
Right.
Assuming 6 to 7 gigawatt or 8 gigawatt is coming from thermal.
Right.
So balance leftover is about say 16, 17 gigawatt, and wind and solar, if we say combined load factor of 30% only, not like thermal, which is at 70, 75%, which means we need a 3 times the capacity of, even if we say 15 gigawatt. So 45 gigawatt of, 45 to 50 gigawatt of capacity addition is required in the country.
Right.
And government also announced that 2 years back, that every year 50 gigawatt. And the first step last year was that the first time ever the bidding took place for 50 gigawatt.
Right.
And in the current year also H1 in excess of 22 gigawatt bidding has taken place.
Sure.
So we see that this is the area where the focus is going to be there for us. And as you asked for that number of players entering into this space, and also the tariffs I will say that have stabilized. If we see last 6 to 8 months, barring 5 paisa, 10 paisa here or there from one bit to other.
Yes.
But I think the current levels of tariffs have stabilized.
Right.
And we feel that this is not going to change significantly.
Right.
Because the size of the cake is so big that anyone who comes, for everyone there is a space.
Absolutely.
So there is not going to be, we see that a bid war or anything to be unreasonable. What we witnessed, that famous Badla 2 rupees a few years back, that is not going to be, the scenario is what we feel, and that is how we are preparing ourselves, we have prepared ourselves. In addition to that, as I told just some time back, that solution-based supply.
Right.
So customized solution, that is where a lot of innovation, lot of planning needs, lot of engineering is required to provide a solution which is best for the buyer.
Right.
So these are the areas we are focusing, and we are sure that the tariffs we feel will remain range bound only, not any significant change is what we see.
Right. You know, Mr. Mahindra, keeping that in mind, and I was going through your cash flows as well, and your cash flows have improved, certainly have seen an improvement, but you do have a lot of capital expenditure which will come into play over the next few years. Based on that, I'm looking at your debt to equity ratio, which has come off to a certain extent for the quarter gone by, or rather the first half. But how does this play out now, considering your cash inflows, also the kind of debt levels at which you are currently, and the capital expenditure that you put forward?
See, when we see that at the current capacity levels, with the free cash which we are generating is in excess of 3,700 to 4,000 crores.
Right.
And also with reaching 10 gigawatt by March 25, the operational capacity, our free cash generation will further increase.
Right.
And also we know that this is a 3:1 debt equity business.
Right.
So if I have maybe 5,000 also only, so raising 15,000 is not at all a challenge.
Right.
So maybe 1.5 to $2 billion investment every year from the present cash flows is definitely not at all a challenge for us. So we feel, and also like the thermal assets, which give a lot of good returns, that also we can deploy in increasing our capacities in the renewable energy space.
Right. And, you know, the kind of capital expenditure that you have earmarked over the next maybe 2 or 3 years, does that start to moderate after maybe 2 years down the line? Does it come off quite a bit because by then you have put in enough capacity? Or does that mean that it's going to potentially increase because you envisage a lot more demand to come through?
Yes, we see that the country, we all know that the 500 gigawatt of renewable energy by 2030, what the government of India has already announced, and that is on track, maybe a few gigawatt here or there. It is moving fast in that direction, and we see this as a huge opportunity. Right. And about 2.5 years back, when we announced our strategy 2.0 of reaching 20 gigawatt by 2030, and in the phase 1, 10 gigawatt by FY25. We are well on track of reaching 10 gigawatt as the phase 1 by end of the current fiscal.
Right.
So, and with the order pipeline of 9.2 gigawatt which we have, out of which more than 2/3 of the PPA is also signed.
Sure.
So we are quite confident that this 20 gigawatt which we had said earlier by 2030 will be happening significantly earlier.
Right.
So to accelerate this growth, maybe you may recall that in April of the current fiscal, we had raised a QIP.
Yeah.
Which has also enabled us to, it was just to accelerate our growth. Otherwise, we are comfortable with what free cash we are generating and what we had to go up to FY30.
Right.
So now to accelerate, this has also helped us. So that will not be a constraint with our strong balance sheet. Because industry, if you see the sector operates at a debt equity, maybe a 5.5 is a very comfortable number.
Sure.
Presently, if you see at the end of the H1, our debt to equity is at a rate at 4.1.
Right.
But and if I remove the work in progress, which will start giving me the cash once the capacity gets commissioned,
right.
if I take the net debt to EBITDA, removing work in progress debt, then it is only at 2.2.
Right, much lower, yes.
Much lower. So this gives us a lot of cushion and headroom to accelerate our growth. So, and beyond 20 gigawatt, as we said, that will be happening significantly earlier. We will be continuing to take part in the country's growth.
Right.
And that is not the place where, at the time where we will like to slow down or stop.
All right, there you have it, the management of JSW Energy telling us about how things could potentially plan out over the course of the next 3 years. Strong demand is envisaged. Well, at least as far as the ratings of the company concerned, it's certainly a good one based on its past performance and what the street is making of it. But on that note, it's a wrap on this edition of, well, Know Your Company. Lots more lined up on the other side. Stay tuned to NDTV Profit.